Well, streaming gloom aside, we're seeing an overall strong start to earnings season. But is it built to last? Yahoo Finance's Blikre is here with more. Jared, what are you watching?
That's right. As of right now, 64 S&P 500 companies, or 16% of the index by market cap, have reported earnings. And while it's still very early, the results are skewed by big banks. Both sales and earnings growth, they are running about 10%. This is healthy by historical standards, and stocks have been responding positively. Average stock price has gained 1.3% after reporting earnings, with double beats, and that's beats on both sales and profits. Those have been leading to an average rise of 2.1%. And this is higher than the 5-year average of those double beats. Meanwhile, double misses, which miss expectations on both profits and revenues, that's been leading to half-a-point declines on average. But that's actually much better than the average. So while it's still pretty early in the season, it does seem that price reactions have been a bit generous versus historical norms, rising more on beats and not getting punished as much on misses. Now, some on Wall Street have been pounding the table that earnings expectations for this year are still too high. Economists crunching the numbers from a top-down perspective are expecting the earnings per share on the S&P 500 to come down to about $200 a share. But if you're deriving that number from a bottoms-up analysis, the actual profits from companies in the S&P 500, that current number is $218. So that's a big difference, 218 up here and 200 down here, a difference of opinions. And we don't know who's right just yet. But as earnings season wears on, we're going to see maybe that the bar was set too low or too high. And there's a long way to go. 436 more companies in the S&P 500, including one of the kahuna caps, Tesla, after the bell today. Just want to show you what the NASDAQ has shown in terms of performance this season. This is quarter 2 right now. You can see kind of a mixed picture, more green than red. Let me show you what software has been doing. A lot more green than red here. But then when we show what's been happening with the semiconductors, lots of red. And this is the cyclical sector that I have my eyes on this earnings season. Look for any earnings regarding any of these companies. Taiwan Semi down 6% today. ASML down 8% today. These are the bellwethers that we want to keep an eye on, Rochelle.